Hello and welcome. My name is Victoria Tozer-Pennington. I'm the editor of Airline Economics magazine. And Airline Economics and KPMG are very delighted to be joined by Mike Inglese, who is the CEO of Aircastle. Thanks for joining us today. But before we kick off, do you want to tell our listeners a little bit about Aircastle?
Sure. Thank you, Victoria. I appreciate you having me as part of the series this year. Aircastle is one of the leading aircraft lessors in the world. We've been in business for a little over 16 years. During 2020, in the early part of the year, we were taken private by our then largest shareholder, Marubeni Corporation of Japan, and Mizuho Leasing. We had 270 aircraft on lease to 85 lessees in 40 countries around the world, enjoying investment grade credit rating, and continue to be active in trading, buying, selling aircraft, as the secondary market has predominantly been our source of acquisitions and growth over the years. So we're dealing with the COVID pandemic like everyone else this year, and working with our customers around the world to try to help us all get through this and capitalize on the positive vaccine news we've seen over the past month.
Indeed, great. So I should probably say we're recording this just 3 days before the holidays. So we're about 9 months into the pandemic, and there's been such a huge level of disruption and distress. So as we sit here today, Mike, how is your customer base performing, and how is that split between the various geographies in which you operate?
So I'd say all in all, reasonably well, given the circumstances across our customer base. The traffic recovery has been uneven around the world. Large domestic markets like China, the US, Brazil, Mexico, Russia have fared better, generally speaking, until recently. Parts of Europe, and we've seen lots of pent-up demand, especially for leisure travel around the world. But with the recent spikes, again, it's kind of a mixed bag amongst the holidays here in the US of much more desire to travel with a greater sort of virus spread. So it's dampening what would otherwise, I think, be a lot of pent-up demand for travels. Carriers who rely on long-haul business traffic, I think, are suffering the most by and large. And whether that's people who specialize in long-haul traffic, it's been a much tougher struggle as that traffic has really been severely impacted, and we haven't seen any meaningful rebound for those assets other than people flying freight, given what's happening in the world, and we're all stuck at home and shopping on Amazon and grocery apps and DoorDash to have dinner delivered. So the e-commerce has at least helped provide some opportunity for airlines to get some freight traffic to mitigate some of the pain of the fall off in passenger demand.
So I think given the level of government support, depending on your jurisdiction, of course, I think we've seen relatively few airline failures to date. But what's your outlook? Do you think over the next 6 months, do you think we're just seeing the tip of the iceberg here?
Look, I don't know if I'd call it an iceberg, but I think it's reasonable to expect some airlines will continue to struggle and that we will see some more failures as we work our way through the next 6 months, call it. Clearly, with the resurgence of the virus in Europe and the US, it's creating pressures. The US airlines have enjoyed substantial government support compared to other parts of the world, which has been obviously good for them and their employees. And another round was included in the bill that I think is expected to get signed today that'll sort of provide another 3-month help in the form of what they've seen before for payroll. And I think they're expecting there'll be another stimulus package when we have a change of administration in a month, but that's yet to be seen. You've seen some government support in other parts of the world as well to help airlines in Europe, in parts of Asia. Latin America, I think, has by and large been the region that's been the most devoid of government support. And frankly, I think their governments thought it would be best for them to do the rehabilitation process and see how that plays before they commit taxpayer funds to what those airlines are going through. And I think it's going to be a while before any one of them emerges, but I think LATAM will emerge a much stronger, better credit with a downsized airline eventually when they come out, and we'll see how the same plays out for Aeromexico and Avianca as they work their way through the crisis.
So given this situation, have you changed the key metrics that you use to evaluate the creditworthiness of airlines?
Well, clearly the term airline credit has become maybe a bigger oxymoron than it ever was in the world of finance. So you have to look at the airline's business model, how they fit into the places where they're playing, what kind of actions they've been able to take to bolster their own liquidity, whether it's through loans, sale leasebacks, right sizing their cost structure, et cetera, deferring CapEx in the form of order books. And so we're trying to evaluate what people are doing and who are the players that we think will come out of this pandemic in reasonable shape and have what we believe is a market position that when travel resumes will be successful. And as an example, one of the few acquisitions we've done in the current pandemic timeframe has been with Volaris in Mexico. We recently did a couple A320neo sale and leasebacks with them. Another financing party fell through at the last minute for them, and we were able to capitalize on an opportunity with what we think is clearly the best run airline in Mexico and in a market that we think they will continue to be the strongest player in, regardless of how the Aeromexico situation plays out.
So we've seen airlines raise a huge amount of money using capital markets. What's your view for the lessors as well? What's your views on lessors that are accessing those debt markets in terms of capital markets and the ability that they can raise finance from traditional aviation banks?
Look, what we've seen has been, I think, sort of the ebb and flow in the early days in the March to June timeframe. Clearly, the spreads on lessor capital markets bonds widened out. People weren't quite sure where all this was going and how it was going to play out. I think we have seen a pretty substantial tightening of spreads given the amount of government liquidity around the world to support economies in the context of what's happening. And lessors have been very active over the last 6 months in issuing new debt, in doing tenders to kind of help move their maturity stacks to the right and manage liquidity in the context of also managing order book deferrals, managing cost structure, and of course, supporting all of our existing lessees around the world who clearly have needed support from the lessor community to make their way through this.
So in recent years, we've seen aviation asset-backed securitizations become a very important source of funding for leasing companies. So that market is now effectively shut and has been for some time. How important do you think it is that the market reopens for the sector?
I think it's reasonably important. It's been a market that has been sort of on and off again. If you look back at the last 20 years, different downturns have had different effects on the types of financing that are available in any short window of time. But I think over time, the ABS market plays an important role to provide additional liquidity in the secondary market for the bigger lessors and some of the medium-sized lessors as a source of funding or as a source of, if you will, transaction capability to sell into a secondary market. So I think over time, it has played an important part in that secondary market and in the financing markets for the sector. And I think it will come back. Its form and how many tranches might be available to do in the near term will probably be fewer than we saw, a year and a half ago. But I think it will come back. And I think, I can't tell you when, but it will be back. It will have slightly different form and characteristics. Maybe less wide bodies can get done in ABS. Maybe there's a heightened emphasis on credit and business model of lessees as we come back and that market starts to build again. But I think it will be back.
So just moving to the actual aircraft, the manufacturers, how have they been impacted? And what are your thoughts on how they're going to manage production rates going forward and whether or not that will impact on how leasing companies interact with them?
Look, clearly, I think they both have seen, and we've all seen, given, we had a great run for a decade and we were all wondering what was going to cause the downturn. I don't think this type of pandemic was at the top of anyone's list of what would cause it, but here we are, as you said, 9 months into it. It's clearly impacted the OEMs in terms of their ability to deliver aircraft to customers who are looking to defer deliveries as best they can and manage their CapEx. And you'll have the natural tension between OEMs whose lifeblood is making and selling airplanes and airlines who are stretched and taking on more debt in survival mode this year. So as airlines work their way out of that debt, I think leasing companies will continue to play an important role in helping finance orders and order book deliveries as we go forward. The manufacturers are going to manage their backlog, and I think reasonably and prudently, but as I said, their business is delivering airplanes, and they don't get PDPs, which is an important source of working capital for them, and they're not getting those delivery payments if they're not delivering airplanes. So there'll be the natural tension. I think we'll clearly see diminished levels from what we experienced pre-COVID. Eventually, I think it'll work its way back as we transition to the new technology of A320neos and the MAX, now that it's back in service, and as Boeing works its way through that backlog and begins to resume production, you'll see over the next 5 to 10 years, the natural transition of the world's narrow body fleet to that technology. And then what's beyond that is, probably on the drawing board, and we'll have a very big ESG and environmental, I think, focus around it.
Indeed. So we'll come to the ESG question a little bit later, but I wanted just sticking with the aircraft. We've seen some early retirements of certain aircraft types. I mean, you've already mentioned the stress on wide bodies. What kind of impact do you see it having on, all those aircraft retirements and extensions and things, having an impact on the way aircraft are being financed?
Look, we're certainly seeing in today's market more supply than there is demand, whether it's narrow body or wide bodies. I think you're seeing airlines basically retire and transition out of all the older kit that's been flying around, whether it's 747s, A380s are going to face a premature retirement compared to when they rolled out, and some of the older stuff that was still flying is getting parked and isn't likely to fly again, whether it's older narrow bodies or 757s and 767s. So we're seeing that in a heightened level compared to what we saw during the boom decade. And then clearly, as we move back to recovery here, and whether that takes 2, 3, 4, or 5 years, there's a wide range of views about how fast travel will snap back. That will have implications, I think, on how sort of mid-aged and older 777s and A330s will fare as the market rebounds.
Indeed. And then just sticking really with that distress, we've probably seen we have seen a limited number of restructuring on the leasing company side. I think there's been a couple of rating downgrades this week. But do you think there are any more formal debt restructurings will happen in the leasing side? And when do you think that might happen?
I think there'll be sort of a delayed time frame on when you might see some more of that in the natural evolution of working with your customers, but at some point there's only so much leasing companies can do. So my personal expectation is over time you probably will see some leasing consolidation as a result of the weakening of some players versus other players who will probably navigate this pandemic in a better fashion.
So do you think strong parents is really those that are going to survive this?
I think having strong parents and, of course, having strong business model and liquidity sources is ultimately what are going to help people navigate this. It's a capital intensive business, and making sure you have strong liquidity and having extra support from a parent beyond that and your own sort of wherewithal may be important for some players. And if you look at the people who've been very active in the sale leaseback market during this pandemic, it's not surprisingly Bank of China Aviation, who did this during the financial crisis quite adeptly and did very good investing. You've seen CDB Aviation be reasonably aggressive, and some of the private firms who had raised money in 2019 looking to deploy it still had access, and you've seen people like Castle Lake and BBAM also more active than typically, and other players recently in that market. But the Chinese leasing companies appear to still be pretty active, and there has been a fair volume of sale leaseback transactions this year.
That's right. So, I mean, you mentioned capital intensive business. We haven't really seen a shortage of capital. I think there is money there waiting to invest. So with all this distress, there's obviously opportunities. I just wondered what opportunities you saw arising in aviation and whether or not that would drive any transformative change within the industry.
Look, I think that today it's still an attractive investment asset from our viewpoint, and I think many people share that. I think there's still, on a relative basis compared to what other things people can do with their money and other asset classes, even with diminished returns we've seen because of the amount of capital flowing into our sector over the last few years, it's still a very attractive relative value investment target. And I think you'll still see a fair bit of capital coming into the sector, and you'll see people who've been in it and who have been positioning themselves for maybe a different form of downturn will be well positioned to take advantage of opportunities, whether it's sale leasebacks, perhaps picking up portfolios at discounts from people who may not otherwise make it through. And as I said, the forms of consolidation, sale leaseback opportunities, and more secondary trading as people start to see the vaccine roll out and people get a little more confident on the timing and trajectory of a recovery, I think will drive, additional transactions in the marketplace.
I think you just touched on my next question. It was whether or not you saw that new liquidity coming in from new players to the aviation space, or whether it would be more from existing investors.
I think it's going to be a mix. I think, you've had people in, different parts of the world, whether it's pension funds and sovereign wealth funds, who've played in this space in different forms and fashions, whether it was direct investing or fund investing, and people who had perhaps sort of cashed out, if you will, before the crisis, who are now taking another look at the sector and saying, is now a good time to come back in? There are, for the longest time now, there's always a handful of aircraft leasing or airline CEOs running around looking to raise funding for a new fund to buy aircraft. And I think that will continue. And as I said, I think it's still an attractive asset class. And I think with the right team and the right investors and the right outlook, you'll find both new and familiar people continuing to drive the space.
Yeah, I think that's right. I think the aviation industry has really matured over the last decade. I mean, I think it's attracted a lot of different investors in the space. Have you seen that increase in sophistication of investors? And do you think that this crisis might impact their view on how, their portfolios are made up and their service provider choice?
I think there'll be maybe a little more discerning around, who people work with as partners, how they think about the asset, how lease terms have evolved over the last decade to perhaps become a little more lessee friendly than when I started at this 14 years ago. But as you said, it's part of a maturation of an industry which is an attractive one, and for which the barriers to entry are not, based on intellectual property or, scientific formulas. It's some gray matter, some experience, and some, gray hair, I think is helpful for working your way through what people have seen before, not in this particular magnitude and fashion, obviously. But we've been through cycles, we've been through airline distress, and I think by and large, as I said in the beginning, there's a lot of pent up demand for people to travel.
And then just coming to the ESG point, the environmental climate change action. So before the pandemic came, it was all over the headlines about aviation's contribution to climate change and what it's doing about it. It seems to have taken a back seat just for now, but what are your thoughts on how the crisis will impact on that agenda for aviation?
Yeah, look, I think you're right. It may have, slightly put it aside for the second, as everyone is, for the first, from March through September, there were lots of people focused on survival over anything else, whether it was airlines and suppliers and OEMs and lessors across the whole value chain. But it's not going to dampen the ESG investment focus across the world and across all sectors. And so aviation won't escape it. It will be back, and we will need to do more, again, across the value chain, to think about, getting rid of airplanes as they currently exist is a multi-decade proposition. It's not something that's going to happen in a short-term horizon. We will get our way there in time. Airbus, and I'm sure Airbus seems to be more public about what they're doing around sort of new propulsion types and systems and airframe shapes, et cetera. But I'm sure Boeing, despite everything that's gone on there in the last year, is not sitting on their hands as it relates to those topics as well. So we will get there in what form it takes. You need lots of advances in battery efficiency and weight to think about an all electric airplane that's going to replace a narrow body mainline today, or a wide body. But there will be along the way some hybrid systems that will be more economically and environmentally efficient, but it will take time. But that topic is still front and center in many sectors, and you're seeing the oil companies get beat up by ESG advocates, and the world will look a lot different in 2 decades than it does today, even in aviation.
I think that's right. And then just in closing, I think 2020 has been a pretty bad, gloomy year for all of us. Now we're going into 2021. How optimistic are you about the recovery and the future for the industry?
I'm very optimistic about the future of the industry. I'm not sure 2021 is going to turn out to be as positive as many of us are hoping for. I think vaccine rollout will take time. I think getting people comfortable taking it and making people feel safe about flying around the world, not just in a few major countries, is what it's going to take to get that recovery back to where we want it to be. And so we need better testing, we need vaccinations, and it's going to take time. And I think the first half of 2021 is still going to be pretty rough, and we're all hopeful that by summertime we'll see a much broader distribution and acceptance of vaccines. But it's not a short-term step function back to where we were.
Okay, well, thank you very much, Mike, for sharing your thoughts with us. We appreciate you joining us today.
Thank you for having me. Appreciate it, and Merry Christmas.